Welcome back to the channel, investors. This is your passive income investor, Dennis. Welcome to Kingdom Millionaire Academy, where we are raising a community of millionaires. Today, we're diving deep into one of the most dominant companies on the Ghana Stock Exchange, MTN Ghana. They just dropped their Q3 2025 interim report, and the numbers are nothing short of explosive. Is this a golden buying opportunity, or are there hidden risks? We're going to break down the financials, calculate the crucial P/E ratio, and even compare it to another giant, GCB Bank, to help you make your decision. Let's get into it. First, let's look at the headline numbers. For the 9 months ending September 2025, MTN Ghana isn't just growing. It's on fire. Service revenue exploded by 36.3% to 17.3 billion cedis. This is driven by you and me using more data and everyone using mobile money. So if you use MTN but do not own MTN shares, you are working for others. Even more impressive, profit after tax surged by 45.9% to 5.5 billion cedis. This means they're not just making more money, they're keeping more of it, showing incredible operational efficiency. This profit growth trickles down to us, the shareholders, as earnings per share (EPS) jumped to 0.415 cedis. Remember this number. It's key for valuation later. The bottom line. The core business is incredibly healthy and accelerating. This makes perfect sense because the Ghanaian population are increasingly making use of data for myriad of reasons. Almost every young adult has a smartphone now, and the lifeline of your smartphone is data. MTN being the giant in the telecommunication space, they have the largest market share and hence they are going to give investors so much value if this trend continues. But a profitable company isn't always a cash-rich company. So how's their cash flow? Stellar. They generated a massive 4.68 billion cedis from operations. They reinvested almost all of that, 4.53 billion, back into the network. This is great for future growth. And the best part? They still had plenty left to pay shareholders a whopping 4.24 billion cedis in dividends. This is a company that is both investing for the future and rewarding its owners today. Okay, so the company is doing great. But is the stock cheap or expensive? This is where the price-to-earnings, or P/E ratio, comes in. The share price as of November 10, 2025 was 4.05 cedis. The EPS, as we saw, was 0.415 cedis for just 9 months. So, the P/E ratio is 4.05 divided by 0.415, which equals approximately 9.76. What does a P/E of 9.76 mean? In simple terms, you are paying almost 10 cedis for every 1 cedi of MTN's earnings. For a company growing its earnings at over 45%, a P/E of about 10 is generally considered very, very cheap. This means MTN Ghana's stock is not overvalued. It's actually trading at a discount relative to its earnings growth. Given its strong cash flow, high dividend payouts, and expanding customer base, the valuation looks undemanding and appealing. Typically, you'd expect to pay a much higher price for this kind of growth. This suggests MTN Ghana might be significantly undervalued by the market. Now, let's contrast this with another blue-chip stock we analyzed recently, GCB Bank. Though the two are in different sectors of the economy, they are major players on the Ghana stock market. Does a P/E ratio of 3.26 make GCB a better stock than MTN? I do not think so, though GCB appears very cheap comparing the P/E ratios. MTN Ghana is a growth stock. Think of it as a rocket ship. Huge revenue and profit growth, dominating the digital future. Higher potential returns, but with more sensitivity to macroeconomic shocks like currency depreciation. GCB Bank is a value/income stock. Think of it as a steady, reliable train. Slower, stable growth tied to the economy. It's a great source of dividend income and is less volatile. The choice isn't about which is better, but about your investment goals. Do you want aggressive growth or stable income? MTN clearly fits the growth category. One great advantage with MTN is the large volume of trade as compared to GCB. This makes it easier to buy and sell MTN shares as compared to others on the Ghana Stock Exchange. Of course, no investment is without risk. For MTN, the main risks aren't about their business execution. They've proven they're excellent at that. The risks are external. 1. Macroeconomic volatility. A sudden worsening of the cedi's value or inflation could spook the market. 2. Geopolitical factors. Global issues can impact the local economy. 3. Technology shifts. The slow decline of traditional voice calls in favor of database calls is a challenge they are actively managing. However, given their market dominance, strategic investments, and ridiculously strong financials, I believe they are well equipped to navigate these challenges. So what's the verdict? Based on this phenomenal report and the current cheap valuation, my recommendation for growth-oriented investors is a strong buy. The combination of explosive earnings growth, a healthy dividend, and a low P/E ratio presents a compelling opportunity. It's a chance to buy a world-class operator at a very reasonable price. For existing shareholders, this is absolutely a hold. There is no fundamental reason to sell a company performing this well. This is what I am doing with MTN shares. I am buying every month, using the principle of dollar cost average. I strongly believe a year by this time, MTN may be selling at over 8 cedis per share. I continue to tell our investment community, if you are invested in Ghana, MTN is a must. This is not financial advice. Do your own research. What do you think? Are you buying more MTN Ghana? Or are you cautious about the macroeconomic risks? Let me know in the comments below. If you found this analysis helpful, smash that like button, subscribe for more deep dives, and hit the notification bell so you don't miss our next one. If you are new to stocks or want to join our community, check the link in the description. If you are interested in the stock market, you can invest through brokers like IC Wealth and Blackstar digital platforms from the comfort of your home. Until next time, invest wisely.